Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital asset regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we had Fred Thiel, Chairman and CEO of Nasdaq-listed Mara, as well as Lee Bratcher, founder and president of the Texas Blockchain Council. We're here to discuss the convergence of the energy transformation and digital infrastructure. Gentlemen, it is great to have the both of you with us. Welcome to Trade Talks. And before we get into that conversation, let's learn more about the companies. Fred, remind the audience what Mara's role is in the digital asset ecosystem.
Sure. It's great to be here. So Mara sits really at the convergence point between energy and data centers. We essentially optimize and monetize every last electron available that exists in the energy space, energy that more often than not is either unusable because it's stranded or is just in excess regarding the demand. So we focus on really monetizing and optimizing those electrons. We're also one of the largest holders of Bitcoin amongst publicly traded company, number 2 after MicroStrategy, with nearing now 40,000 Bitcoin in our balance sheet. So we're big believers in Bitcoin, but we also view Bitcoin as a very useful tool for balancing the energy grid and helping utilities and especially renewable energy companies better leverage their assets. And as a matter of fact, this week we just announced that we bought a wind farm and going into the renewable energy business ourselves.
All right, and perfect segue for Lee. Speaking of Texas, which of course is well known for energy production, tell us more about the work that you're doing with the Texas Blockchain Council.
Thanks, Jill. Yeah, the Texas Blockchain Council is a trade association. We work on behalf of our over 100 corporate members on regulatory affairs work, lobbying, and policy work. And we specialize in Bitcoin mining, digital infrastructure, electrical infrastructure, and grid policy.
All right. And Fred, when you think about the similarities between AI and Bitcoin mining, when you marry those together, you say that you get a better grid profile. Explain to us what you mean by that.
Yeah, so when you look at the traditional grid, and I'll use Texas as an example because the folks at ERCOT do such a good job with this. Essentially, it's a market that operates on an auction basis. So you have blocks of energy in kind of 10-minute increments. And the amount of renewable energy that Texas has, which has been an absolutely amazing build out of solar and wind farms. The challenge with solar and wind is that it's intermittent. It doesn't run 24/7. The sun doesn't shine 24 hours a day, and the wind doesn't blow 24 hours a day. And if it's cloudy, you have less sun. And at different times of the year, wind blows to different degrees. And so it's very hard for the grid to balance this. And a lot of wind and solar farms have been built in Texas, especially in the West. Most of the consumption is in the East. There's only so much transmission capacity to move this energy from west to east. And so what we do is we bring consumption to the point of generation. We bring the marketplace, if you would, to the place of generation. And whenever the grid needs energy, we can shut down. We are what's called dispatchable baseload. So baseload is consumption of energy that's consistent. The difference about what we do versus AI or versus a steel mill is that we can shut down our systems in just a few minutes and give all that energy back to the grid. So in Texas, if you think about during Storm Uri, they needed to put online peaker plants, for example, that are basically a jet engine in a building. They charge up to $5,000 a megawatt hour for their energy, when normal wholesale energy in Texas is $40 or $50 a megawatt hour. We can simply shut down our systems and give the energy back to the grid while we will bid it into the system. And it may cost more than $40 or $50 a megawatt hour. It costs substantially less than $5,000 a megawatt hour, which saves the consumers in Texas. And so we act as a balancer, and we do that in places as far afield as UAE, even, where we are the primary balancer of the grid in UAE.
Right. And Lee, of course, AI is going to require a huge compute load and all the other technologies that are being deployed, and the demand has to be met. So how do you determine what type of site is viable? Who is going to be able to meet that type of demand? How are you working through these nuances to make sure that you'll be able to execute on all these projects?
Well, it's a great question. There's been a lot of talk in the Bitcoin mining world about converting Bitcoin mining sites to AI, high performance computing. And some of that is possible. The big thing that most people don't understand is Most of AI compute is 24/7 compute. They oftentimes want to be near big urban areas for a variety of reasons, latency, jobs, etc. And there are some Bitcoin mining sites that fits the bill, and there are possibilities for conversion. There's also some greater nuance where if you're doing AI inference versus AI model training, and if you're doing inference, you're probably going to need high levels of redundancy, 5 nines of redundancy. If you're doing model training, you might be using a ton of energy. Your GPUs will be training a model, and then once that model is done training, maybe there's a few days off while you gear up the next model for training. So the energy profile and the grid profile for these AI high performance computing data centers is really not yet set. And so the easiest answer for people when they're asking me, hey, can you convert Bitcoin mining to AI, is it depends. It depends on a lot of factors, and not every Bitcoin mining site is able to be converted. There's also about a 20x capex increase when you're moving from Bitcoin mining to AI. Those need to be tier 1 data centers, and they need to have backup generation and HVAC and all sorts of expensive components where it could cost up to $20 million per megawatt of build out for that, whereas Bitcoin mining could be as little as $400,000 per megawatt.
Yeah, I mean,
there is a really interesting convergence though, which as Lee said quite accurately, there's certain aspects that AI needs. The other thing is AI workloads though are very spiky, especially in inference, right? And inference workloads go up and down with a lot of irregularity because they're based on the needs of the queries, if you would. Most inference workloads will not be human driven, they'll be machine driven. There'll be systems, agents basically, that are putting demand on the system. And so those AI data centers need a load that can work asymmetrically with them, meaning a load that can come on and come off as their workloads go up and down, so that they can present to the grid a stable demand curve. Because if their workloads are spiky, the grid has to basically reserve energy for them, which means they have to charge extra on a per megawatt hour. And so where you marry Bitcoin miners with an AI site, where the Bitcoin mining is purely a complement that acts to balance AI's load, just like we balance the grid's needs, we can balance the AI needs. And so this is an interesting new concept in Bitcoin mining, where if you have the right systems, you can actually load balance AI systems so they can operate more reliably and provide the grid with more stable demand, which makes ERCOT's job in Texas a lot easier, certainly. So that's an area we're very excited about.
And that was essentially the question I was going to ask you. Do we have the skill set and the capabilities to allow these transitions to take place? So thank you for reading my mind there. Do you think that renewable energy resources, such as the wind farm that you recently acquired, will also start to be leveraged in a more frequent way?
So I think a couple of things. Yeah, a wind farm provides near zero marginal cost energy to a Bitcoin miner, but the wind only blows so many hours of the day. And so the initial goal for us was to take machines that had already been paid for from a prior generation and put them into, we call it the Advanced ASIC Retirement Program, AARP, no pun intended, that essentially lets those machines have an extended lifeline until they die, because the energy is free, so the efficiency is less important. And we still have the ability to sell energy into the grid if and when the grid needs it. So we're still providing the service, but we're not letting any electron go to waste. Over time, AI systems will develop a sophisticated ability to orchestrate workloads across different locations, such that you can essentially broker out a workload to some renewable sites where, I'm only going to need an hour of this workload. And right now, that data center happens to be operating. And these require sophisticated orchestration systems. So if you think about what Amazon has done to shopping, it took 20 years, right? They started by selling books. Now they sell everything. And in reality, Amazon is a marketplace. There will be a marketplace for energy, and there will be a marketplace for compute workloads. And depending on the nature of the compute workload you need, do you need a streaming workload? Do you need an AI inference workload? Do you need a training workload, right? Or do you just need an application server workload? A marketplace will automatically parcel that out to whatever data center has available capacity at the right price with the right performance criteria and abstract that from the user, if you would. And so I think this is going to be really exciting. This is kind of where Microsoft, where Google, where Amazon with AWS, this is where they're all heading longer term, where they can be the marketplace controlling access. They don't have to be the operator of the data centers anymore. So this creates a whole super interesting business for data center operators and renewable energy and traditional, data centers.
Right. And Lee, I want to talk about the policy framework for a moment here and shift gears. We certainly saw the immediate response now that we're post-election to the digital asset space. But when you think about digital assets and you think about AI, those are two significant areas where both industries are really advocating for a constructive framework to be put around the both of them. And the point of this conversation is showing how AI and the digital asset space can be symbiotic, right? So when you think about that, just how far can we go until this framework is in place?
Well, it's a great point, and it's interesting to note that future President-elect Donald Trump just named an AI and crypto czar, and it's actually interesting that it's all one and the same. AI crypto czar David Sachs is coming in for that position, and so there's a couple different areas of synergy. One is data provenance within the software kind of piece of AI. There's a lot of applications for blockchain and for sort of veracity of information and data that are going into these models, or to prevent deepfake videos. That certainly has some national security implications. And then on the complete opposite end, I guess upstream of that is this, what we've been talking about, what Fred's been talking about with the energy and compute marketplace. That is another area where digital assets and AI are really the new power couple, to borrow a phrase from KPMG. And so I think what we'll see is a policy framework that recognizes that those two industries are fast conflating and coming together. From an energy policy perspective, though, it will be really interesting to see how different grid operators deal with this, because if you just have an AI data center that's willing to pay any amount of money for electricity to stay on with 5 nines of redundancy 24/7, that's a very scary, large load for any grid operator across the country. Now, if they're doing what Fred is suggesting and they're balancing that with Bitcoin mining, perhaps a renewable energy resource behind the meter where you can choose to sell back, that's a much more flexible load that poses less of a concern to regulators and less of a concern to grid operators. And I think in the future, as economies of scale and efficiency become more important, that will be the direction we go. Right now, people are willing to pay 30, 40, 50 cents a kilowatt hour, which would be into the hundreds of dollars a megawatt hour for AI compute, because the demand is such that it requires that right now. But that is unsustainable in the long run.
Yeah. And Fred, I would also argue it doesn't feel as if the crypto space is as parasitic, if you will, to policymakers. I mean, if you think about it, last year at this time, we weren't talking about the digital asset space, on the national level. I mean, it was a key voting issue. Same thing, with AI as well, and recognizing that we're going through this transition in real time and all the different applications that these emerging technologies can put in place to solve a lot of the, everyday problems that we're facing from an energy perspective.
Yeah, I think you have a number of things have converged, sort of the perfect storm, if you would, where you had a concerted effort by an administration and by certain groups who funded environmental activism against Bitcoin mining for the purpose of essentially trying to sideline it. A lot of lobbying done by banks. You had this whole Operation Choke Point 2.0 that's been talked about, the debanking of crypto, and Senator Warren's activities around trying to really, get Bitcoin to be irrelevant. And then all of a sudden you had the ETFs happen, and that started bringing in institutional capital in a big way into the space. And at that point, the kind of the horse was out of the barn, if you would. President-elect Trump's administration very quickly developed a very good understanding of the fact that, there were 100 million Americans who had a very specific opinion on crypto and Bitcoin, and many of these were under 40, and many of them, a majority of them, were actually not Republicans. And so this became a way to get swing voters. And then because the industry, in working with both campaigns, and this was the fact with our company specifically, and many of the miners, we all tried to work with both sides of the fence, right? Because nobody knew who was going to win, but we were, whoever we could get inroads with, we developed inroads. And it was very clear from the Harris administration, the Harris team's perspective, that it was going to be Biden and even further to the progressive side. And they had no desire to even entertain a discussion with a Bitcoin miner, whereas the Republicans were, yeah, bring it on. We see the benefit of this. We understand the need for the U.S. to have a Bitcoin strategic reserve, just like we have a gold reserve and an oil reserve, because we need to be able to project power into those markets. Because if Putin now calls Bitcoin uncontrollable, which means the BRICS now want to use things like Bitcoin, the US has to have enough Bitcoin and enough Bitcoin mining such that they can control enough of the transaction processing of Bitcoin so that US and its allies will have guaranteed access to Bitcoin transaction capacity, because that's what mining is. Mining isn't the discovery of Bitcoins. Right. Mining is processing transactions. We are the Visa MasterCard network for Bitcoin.
Right. I think it's also important to point out too, because now it's in the national security spotlight. We tend to think of things in the US or more Western centric, right? Where we're looking at Bitcoin or other digital assets as a way to hedge or how it's trading or the valuation of it. Whereas there's a couple billion people around the world that use this type of digital asset to transact, to build local economies, to look at alternative ways of capital formation. And we don't want to fall behind there. So while there's spot Bitcoin ETF and other digital asset spots coming, perhaps, coming out, the fact of the matter is, for this to really happen at scale, in my mind, the catalyst is getting this framework around it. Because once that framework is established, then, it takes off in a way where you understand how to operate, not just in terms of product and development and what that means from a banking perspective, Lee, but in terms of energy policy as well.
Yeah, and it's so important to think about the national security implications of all this too. Bitcoin is clearly the most important digital asset. Bitcoin Strategic Reserve would be an incredible tool for the United States and our allies. But the second most important tool are stablecoins, actually. So if stablecoins were its own country, they would buy more U.S. treasuries than Saudi Arabia. Stablecoins are a forced buyer of U.S. treasuries because they're all denominated in dollars. And all the dollars that come in are used to then buy U.S. treasuries. And that creates more demand for treasuries, that further, prolonging the U.S. dollar as the world reserve currency. And this all goes away in, X number of decades when the dollar is no longer the world reserve currency. So stablecoins could actually prolong the dollar as a world reserve currency for many, many decades to come. And I think that's something that's being appreciated more. I mean, we had former House Speaker Paul Ryan at our conference recently, and he spoke to that very thing on stage and in an op-ed for the Wall Street Journal. I think very senior members of both parties are realizing that this industry really underpins our global dominance, and our global dominance is underpinned by our economic strength.
Yeah, it certainly is. And Fred, to wrap up here, how long do you think it will take to get this framework established? Or, next year from now, 2 years from now, will we be having a different conversation with a lot of this in motion?
I think, the next 2 years, the Trump administration has a lot of things on its plate. Some of them are fairly low-hanging fruit relative to crypto that they can do. You could declare through presidential executive order that, the U.S. government will not sell any of the Bitcoin it currently has. It has about 200,000 Bitcoin that the Marshal Service and other agencies have in their possession. You could use that to establish an initial strategic reserve. Senator Lummis has an appropriations bill regarding funding of the U.S. government to acquire Bitcoin. And you could use Social Security funding. You could use all sorts of sources so you're not having to print more money to buy that Bitcoin. It's simply a way to store assets. The energy policy around Bitcoin, I think, is simply putting the right people in place at FERC, putting the right people in place at DOE and other places, and I think enabling permitting fast track. The biggest problem in the U.S. regarding grid infrastructure is the permitting process, and 85% of renewable energy projects get shut down because the permitting pipeline is so slow. And essentially, it's people don't want to see high tension cables over their homes. But the fact that you can now bring the consumption of energy to the energy generation site means you don't need as much transmission capacity. Investing in more microgrid technologies allows you to bring energy to the consumer and generate it in location. Even those types of situations have a benefit from adding Bitcoin to them, because Bitcoin can help monetize that excess energy when it's not being monetized otherwise, right? If you have a small community that has a solar panels on the tops of the buildings and a battery system, there are times where they're going to generate more energy than they need. Well, when that happens, have a little bit of Bitcoin mining associated to it. They can monetize it. That helps pay for the infrastructure for that microgrid.
All right. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Report.